S&P 500 and Nasdaq hit record highs. Deckers soars on UGG demand. The S&P 500 and Nasdaq reached record highs on Friday, buoyed by optimism over an impending US EU trade deal and strong quarterly results from Deckers Outdoor. The S&P 500 surged by 0.40% to close at 6,388.64 points, while the Nasdaq climbed 0.24% to 21,108.32 points, and the Dow Jones Industrial Average rose 0.47% to 44,901.92 points. This week marked a perfect week for the S&P 500, with daily closing records from Monday through Friday, a feat not seen since November 2021. Deckers Outdoor (DECK) led the gains with an 11% spike, thanks to exceeding quarterly estimates with robust demand for its UGG and Hoka brands, particularly in international markets. In contrast, Intel (INTCO) tumbled 8.5% after forecasting steeper quarterly losses and announcing job cuts. The market's enthusiasm is also fueled by recent upbeat earnings reports, trade agreements with Japan and the Philippines, and expectations of further trade deals to avert tariffs. However, some analysts remain skeptical about the durability of these gains, cautioning the disappointment could loom if deals fail to materialize. Looking ahead, investors will focus on the U.S. Federal Reserve's meeting next Thursday, where policymakers are expected to keep interest rates steady while assessing the impact of tariffs on inflation. Traders currently anticipate a 60% chance of a rate cut in September, according to CME's FedWatch tool. Other notable moves included Charter Communications, CHTRO slumping 18% after reporting a larger than expected broadband subscriber loss due to intensified competition from wireless carriers offering bundled internet and 5G services. Paramount Global (PARA-O) dipped 1.6% following US regulators' approval of its $8.4 billion merger with Skydance Media. On the positive side, health insurer Centene (CNCN) rose 6.1% after promising improved profitability in its government-backed healthcare insurance businesses by 2026. S&P 500 companies are projected to increase their second quarter earnings by an average of 7.7% year over year, largely driven by tech-related heavyweights. With advancing issues outnumbering falling ones and a mix of new highs and lows across indices, the market momentum remains robust, albeit with underlying tensions about trade deal uncertainties and potential future rate cuts. But here's where it gets controversial. While the market soars on optimistic forecasts, some experts argue that the current valuations are stretched and that a correction could be imminent if underlying economic fundamentals do not align with these rosy expectations. This raises the question, are investors riding a bubble fueled by hope and anticipation, or is this sustained growth genuinely reflective of a strengthening economy? Only time will tell, but the coming weeks and months will undoubtedly provide crucial insights into the market's true trajectory. And this is the part most people miss. Behind the headlines of record highs and corporate earnings, there are subtle shifts in investor sentiment and strategic positioning that could signal broader market shifts. Paying attention to these nuances might offer a more nuanced understanding of where the market is headed, beyond the surface-level excitement of new records and deal announcements. Europe's strategic response to a no deal with Trump. What to expect? The future of transatlantic trade hangs in the balance, and the European Union is preparing for a potential showdown with the United States. With uncertainty swirling around a possible trade agreement, Brussels is gearing up for a no-deal scenario, and the stakes are incredibly high. This isn't just about tariffs. It's about the future of economic relationships between two of the world's largest trading partners. As of July 2025, the situation is tense. The EU and the US are in a precarious position, with a trade deal far from guaranteed. The clock is ticking, and the EU is ready to respond if the US imposes new tariffs. Lawmakers have already given the green light to a significant package of counter-tariffs, designed to target a wide array of American goods. Discussions are also reportedly underway regarding the deployment of the EU's powerful trade bazooka. For more details, see hashtags CNBC.com 2025/07/22 Europe has a trade bazooka. against Trump's trade tariffs.html. These measures could be implemented very soon, as the deadline of August 1st looms. After this date, EU imports to the US are slated to face a hefty 30% tariff, and the EU is expected to retaliate swiftly. But here's where it gets controversial. While the threat of a trade war looms, there's also a glimmer of hope. Talks about a potential deal have been intensifying this week. Sources suggest that the current base case scenario involves a 15% tariff on EU imports to the US. However, the specifics, including any possible exemptions, are still being ironed out. And this is the part most people miss. The biggest wildcard in this entire situation is US President Donald Trump. Known for his last-minute changes of heart and rapid-fire decision-making, any potential deal is subject to his whims. There are no guarantees about what a final agreement might look like. On Friday, Trump himself acknowledged the uncertainty, telling reporters that the chances of a deal between the US and the EU were only 50-50, or perhaps even less. This statement underscores the volatile nature of the negotiations and the potential for a complete breakdown. So, what exactly is the EU planning to do? Retaliatory tariffs, a tit-for-tat approach. The European Commission has combined two proposed duty packages into a single list, encompassing tariffs on a staggering €93 billion, $109 billion worth of goods. This includes everything from food and beverages to clothing and machinery. A source indicated that these tariffs could reach as high as 30%, mirroring the potential tariffs from the US. EU member states have already approved this combined list, with the measures set to take effect just days after the US's August 1st deadline. This demonstrates the EU's resolve to respond forcefully to any US tariffs. Carsten Brzezinski, global head of macro at ING, anticipates a tariff-level retaliation from the EU if a deal fails to materialize. He expects a tit-for-tat approach, with the EU imposing 30% tariffs on selected US goods, such as motorcycles, cars, clothing, and alcohol. However, Brzezinski also notes that the EU is not fully aligned on its response.